Mr. Gupta, first got to start with the obvious point, which is about asset quality. If I check in on your asset quality across sectors, the numbers what you reported for the quarter gone by, they were dismal, there were splits, there were slippages, and NPA is now threatening to go above 3%. So are you a worried man now?
The numbers for SBI have been traditionally higher than the industry average. So, we don't need to read too much into the absolute numbers, but yes, there has been a significant rise in quarter 2, and therefore I would be readily willing to concede that asset quality is definitely a challenge for the bank. Having said that, slippages, if you look at the slippages in quarter 2 or even in the first half year of this fiscal, the slippages are all across several industries. They are across mining, steel, textiles, paper, packaging, consumer durables, government-sponsored schemes. So, it's not a particular sector or a particular geography where the stress is coming. Also, about 60% of the slippages are from the corporate sector, mid-corporate and large SMEs. Another 20% is from agriculture. So, slippages are really concentrated in these two subsegments. And I think the problems of the first subsegment, which is 60% corporate, are in the external economy. I don't think there is anything particularly wrong with the underwriting standards of the bank or selection of the actual borrowers. On agriculture, I think it's a combination of our having to put in place more robust recovery and control mechanisms, as also persuading people who have the power to pay that they should pay. There could be an element of moral hazard against which we need to sensitize and educate borrower farmers.
Mr. Gupta, morning. On the corporate front though, where is the major pressure point for SBI?
I think on the corporate side, even though we have slipped a very significant amount, it does not mean that all of that is a loss. All these industries, all these corporates have been actually battling a downturn for 2 years and more. And at least in the short run, they don't seem to have got relief. There are higher input costs on the one hand and falling demand on the other. Interest rates is one of the input cost factors. So we need some turnaround in sentiment. We need some relief somewhere, either in the overall economy or in the price and rate structure of commodities and inputs that go into these companies. Once that happens, I am very sure that the turnaround will be very quick.
Mr. Gupta, for the current year, SBI stock is down about 30% plus. It is down about 60% from its all-time high of 3,400. Given the way how markets have punished your stock, do you think the correction is slightly overdone?
No, I think it's very hard to comment on the stock market. It would have been hard for me to comment on whether a price of 3,500 was right. I don't think we as a management of the bank really worry too much about the market price. We know that fundamentally we have a strong model. It's a robust model. It's distributed and it's diversified. Nothing sudden has happened to weaken it, and I'm sure before long we'll be back on health. We need to concentrate on the basics, and we are fixing some of the things like tracking of assets and nursing of those which can be rehabilitated, so that the NPA position is in control. The other factor I think which the markets have taken into account is capital, and internally we have absolutely no worry on capital. The government has clearly said that it will ensure adequate capitalization. 8% of Tier 1 is bound to happen before March 2012. And thereafter, a combination of internal generation and government capital injection will ensure that we are back to 9% plus of Tier 1. We are not constrained for growth. So I think all in all, I would say that we have an absolutely fine model. There is no cause for any long or medium term worry.
Mr. Gupta, markets are expecting a CRR cut by the Reserve Bank of India. Do you think it is required given that liquidity is already quite tight currently?
I think credit offtake is going to be an important factor in judging how liquidity will pan out. As of now, credit demand is not very robust, and at least for State Bank, liquidity is not a problem. In the system, okay, there is borrowing today, and as I said, we will need to figure out how deposits and advances grow in the coming months of the fiscal. YOY deposit growth has been higher this year for the industry itself, and credit growth has been lower. So deposits have been at 18.4%, if I'm not mistaken, for the industry, as against closer to 16 last year. While credit growth has fallen again to 18 or sub 18 from 22.5 last year. Therefore, a CRR cut is very hard to predict whether it will happen, whether it won't happen.
But Mr. Gupta, it's highly unlikely that in the near term lending rates will go up and deposit rates will come down in any hurry, and the spread between deposit rates and the lending rates will not increase. So, can I safely assume that in coming quarters, margins for State Bank of India will come under pressure?
Lending in the Indian banking industry is largely on floating rates. For us, 70% of our portfolio does reprice itself almost instantly because it is linked to base rate or PLR. Therefore, in a rising interest rate scenario, the bank gets a positive arbitrage while advances reprice faster than deposits. Now, assuming that we are now at the peak or close to the peak of interest rates, naturally the reverse will happen. So liabilities will now begin to reprice with a lag, while asset realizations will be steady, or if the rates fall, they will come down faster. So we could see a little contraction in the NIMs. 75 basis points may be too much, but yes, they may come off the Q2 peaks. For us, we did a 3.79% in Q2. Our guidance is at 3.6 to 3.65 for the whole year.
Gupta, let's also address the next big cause of concern for the bank, slowing credit growth. Is private sector capex at a standstill, and do you see them meeting a loan growth target being achievable for this fiscal?
No, I think we have certainly experienced some kind of slowdown. Projects in the pipeline for the bank are not as many as they have been for a long time in the past. And if you look at some of the data that has been put out also, I think month on month overall sanctions have been lower in this quarter than for the preceding 9 quarters. They have been the second lowest in 21 quarters. So I think there is obviously some slowdown in people coming forward and showing interest for new projects. Also, whatever demand is being committed today, a lot of it is coming from the public sector. But that is not unusual to expect. As I said, until there is long-term sentiment on the positive side, people are not really likely to put in a lot of money for capex investment. So we need that turnaround in overall business sentiment.
So what is your credit growth guidance for this year, Mr. Gupta?
We have an overall credit guidance of 16%. And we are reasonably certain that we'll end up somewhere in the 16% territory. Earlier it was 16 to 18%. Now obviously we'll be towards the lower end of the band. And the expectation was that if industry grows at 17 to 18%, we would grow a little slower than the industry. Only to signal to our operating functionaries that we need to be mindful of quality before we go for volumes. Now, if the economy really doesn't show signs of a significant revival, then overall credit growth could be lower for the industry as well as for the bank.
So, Mr. Gupta, specific on power as well, power sector issues, that is, update us on the SEPs. Do you see more restructuring of loans for some of them?
No, SBI has been fortunate. We don't have any problems that we foresee in the power infrastructure segment, which includes the SEBs. State Bank has an exposure of about 34,000 crores funded to the power sector. Of that, SEBs account for about 7,000 crores. Pure distribution companies are about 2,000 crores out of this 7,000 crores. Now for us, the SEB exposures are secured by escrow on receivables as well as, in most cases, state government guarantees. They are also done as 1-year loans on a revolving basis, and they are renewed only if SEBs have had a track record of being of servicing their debts on time. So State Bank does not see any slippage or any concern on this part of the portfolio. We have also not restructured any SEB.
But Mr. Gupta, why are you still lending to the Tamil Nadu Electricity Board despite the RBI circular?
Well, we assess limits as they come up for renewal on a case-by-case basis. There is no directive to lend or not lend. We will be viewing each case on its merits.
Okay, Mr. Gupta, pleasure having you on this show. Thanks very much for taking time out.